It's ultimately the verification, the seal of approval needs to be given by the International Atomic Energy Agency. That's its responsibility. And it all depends upon Iran's level of compliance. If it accelerates the process, sometime in the first half of 2016, there can be a possibility of the lifting of the sanctions.
Yeah.
So from that point onwards, you can see the energy sector, the tourism sector, but I think particularly it's the energy sector which is of most interest to the international community. Obviously, Iran has proven oil reserves, fourth largest in the world, and in terms of natural gas
What's the
reserves,
infrastructure like now there after all these years?
Billions of dollars of investments. That's why many of the targets that the Iranian government is giving, whether it's in the tourism sector, but particularly if you look at the energy sector, they're quite ambitious. One would say overly optimistic. It all depends, apart from their level of compliance for the lifting of sanctions, there's the fact that many foreign companies actually have to go in to do the investing of the money. So you see, Europe, for example, all the major heads of European oil companies have visited Iran in recent months. The Americans haven't. But just because they visited Iran and they had very much engaged in the country beforehand, doesn't mean that they're going to rush to make investments. I think it's going to take more of a gradualist approach.
And the Americans can't in any case, can they? Because they are forbidden to trade with Iran.
There are unilateral American sanctions against Iran, and those are separate, but those can only be lifted by the U.S. Congress.
Okay. So tourism, oil, I mean, with the tourism thing, for example, that's a massive ask about infrastructure, because you've got to get hotels, you've got to make it smooth for tourists. Tourists are very picky and so on. I mean, realistically, do you see it as a tourist destination? I mean, it was soon. Oh, no, it was, yeah.
It was an amazing tourist destination prior to the revolution. But in order to develop, you can have, if they're looking for a high-end tourism, or sort of a 3-star tourism or a 5-star tourism. For 3-star tourism, that can move a bit quicker possibly, but to do a 5-star tourism will take a very, very, very long time. It has the religious sites, the cultural sites. It has, I mean, it's an amazing what it has to offer in terms of tourism, but that, once again, you need an infrastructure for that, and that will take time.
And is it politically stable enough, do you think, now to accept that kind of development?
I would say the political stability is there. It's a matter of the diplomatic elements, the diplomatic aspects. Once again, we go back to that lifting of sanctions, being able to invest your money. And then again, you need good local joint venture partners. And that also takes time. There's a trust issue that since there's been such a gap in time that foreign business hasn't been engaged in Iran, I think it'll take quite a bit of time for them to re-engage. And you can't just go into Iran. You need good, solid local partners.
Of course. And finally, it's something which I always ask you, is the oil price and so on. I mean, how far off are we from Iran actually affecting the oil price, given its vast reserves?
So we're living in a world where the oil market, there's a glut in the oil market. So even if it goes back to market, they have to deal with that reality. They're producing roughly about 1 million barrels per day. They said if the day that the sanctions are lifted, it'll immediately bring it up to 500,000 barrels. And within less than a year, up to pre-sanctions levels, which is roughly 3.4 billion. That's going to require billions of dollars of investments. And they've gone so far as to say that within 5 years, they want to bring it up to 5.7 million barrels a day. That's, in my opinion, overly optimistic, but there is light at the end of the tunnel in Iran. There's a lot of money to be made in Iran. It's just going to take time.